In Asia, Chinese leaders have reportedly agreed to raise the country's budget deficit to 4% of GDP for 2025, marking its highest level on record. According to Reuters, sources familiar with the matter revealed that the move, aimed at supporting an economic growth target of around 5%, was finalized during the recent Central Economic Work Conference. The planned deficit increase represents a significant jump from the initial 3% target for 2024, amounting to an additional $179.4 billion in spending. According to data from the State Administration of Foreign Exchange, China's capital markets experienced a record $45.7 billion outflow in November, driven by global portfolio shifts following Donald Trump's U.S. presidential win. The outflow was part of a $234.6 billion in cross-border payments, resulting in the largest monthly deficit on record. Despite China's policy-driven stock market rally since late September, investor confidence has weakened, compounded by the yuan's depreciation amid looming U.S. tariff threats. This marks a significant increase from October's $25.8 billion outflow. Enterprise Singapore has announced that Singapore's non-oil domestic exports rose 3.4% in November year-on-year, driven by a surge in electronics shipments. This marked a recovery from the revised 4.7% decline in October. On a seasonally adjusted month-on-month basis, exports jumped 14.7% in November. Shipments to Hong Kong and Malaysia saw growth, while exports to major markets like the United States, China, and Japan experienced declines. Minutes released on Tuesday showed that South Korea's Monetary Policy Board has emphasized the need for quick and preemptive action to counter a slowing economy. This followed a decision to lower interest rates for the second consecutive meeting on November 28th. One member stressed the need for coordination with fiscal policy, while another emphasized the importance of responding flexibly to economic shocks amid global uncertainties. They called for timely and flexible coordination with fiscal policy to address risks effectively. South Korea's central bank governor stated on Tuesday that the dollar-won exchange rate had risen since the December 3rd martial law attempt, but that the market was functioning normally without signs of a crisis. The won traded at 1,438.1 per dollar, slightly better than the two-year low of 1,442 recorded on the day of President Yoon Suk-yeol's martial law declaration.